You're listening to Health Coach Conversations, a podcast where our conversations help health coaches all around the world to level up our businesses and to get more clients. I'm with Danielle Hayden today, and our topic is going to be a good one. What is healthy business spending and how does it enhance profitability? Danielle is the co-founder and CEO of Kickstart Accounting, a bookkeeping and accounting firm that is on a mission to coach six-figure plus beyond female entrepreneurs so they can better understand their numbers through bookkeeping, financial analysis, and support so they can grow profitable, sustainable, and enjoyable businesses. Can you explain the philosophy behind the saying, you need to spend money to make money, and how it applies to modern businesses?
Yeah, over the years, it's this really interesting phenomenon happened where I would get onto client calls and my team would get onto client calls. And the first thing a client would say to us is, where should I cut back? Like, where should I cut back in spending? And I thought that was interesting because I always follow that question up with, are you hitting your goals? So if you set revenue goals for this year and you're not hitting your revenue goals, the first thing that I like to do as an accountant is to look at your P&L, your profit and loss statement. And I can tell you why you're not hitting your goals. If we are not investing 8 to 10% of our sales back in advertising and marketing, right, we are not going to grow our business.
Right.
So we need to be able to have a healthy, and I say healthy, level of spending. We do find that people land in one of four personality types. And we have our free spenders, and our free spenders love to spend money. So they don't look at their financials before they go and spend money. They are impulse spenders. They want it, they buy it, they move on. Our keepers hold on to every dollar. And so when you ask our keeper, what are you saving for? They'll say, well, I'm reinvesting all my money back in the business. And I'm like, well, what are you investing in? Like, nothing. I'm just keeping the money in the business. So I have it in the business. So they're savers. And then we have our perfectionists who just obsess over where every dollar is coming in from and out from. And our balance seekers are able to find that healthy perspective between spending money to generate revenue, to support the business of our dreams, to achieve our goals, yet saving enough in our business to be able to sustain the test of time.
Okay. And when you say 10% of your sales on advertising, should it be 10% of what you want to make or 10% of what you're making?
Oh, good question. 1%, the percent that you're actually making today.
Okay. How do you break down the main expense categories by percentages, and what benchmarks should business owners aim for in each category?
So we have a really amazing tool. So if you are more of a visual person, you can go to kickstartaccountinginc.com/healthy and download our healthy percentages worksheet. Okay. Because I'm going to say a lot of numbers right now. And if you're on the move, you can go and download that so you can go step by step. Our first category is advertising and marketing, which we want to be spending between 8 and 10% of our revenue in order to be growing our business. Next, we have payroll. Just because we're profitable, not all profit is equal. So if I'm really, really profitable, but I am working 60 to 80 hours a week, I am dying on the vine, then that's not the same type of profit as somebody who has a work-life balance and a team that supports them in living a healthy lifestyle. So we want to invest, if you're on payroll as a business owner, at least 50% of your sales back into the business and payroll so that we are able to live a healthy lifestyle as a business owner where we have the people to do the things that is not our zone of genius or to support us in growing our business. So that's payroll. We also need outside services. So I recommend about 5 to 10% of your sales on outside services. Your outside services are your experts. There's nobody that you can bring in. I mean, not nobody. You would have to spend a ton of money to bring somebody internally to be an expert in your business. And these include like your business managers, your legal representative, your attorneys, your bookkeepers, and your tax accountants. You can't go learn how to be a bookkeeper. You can't go learn the tax code. So we need to have outside services in our business to support us in the areas where we're never going to be an expert. And so it's healthy to spend money, again, about 5 to 10% of revenue on those services so that we can make sure that we're protected and accountable and compliant. Then we have our operations. Again, as we grow a business, we need to ensure that we are building the infrastructure of our business. So if you're manually doing intake for every client that comes in, or you're manually doing things, is that healthy and sustainable in the long term? We want to have operations costs in our business, such as operations subscriptions. So those systems and softwares that are going to help us in our growth and find that sustainability as a business. So we want about 5% of our sales going back into operating subscriptions and operating costs as well. Oh, and then training and development. I don't want to forget that one. As business owners, how cool is it that it's a business expense to get the training that we need? Like, we get the opportunity to reinvest back in ourselves and invest back in our team. You will always see me with a line item on my P&L. As a business owner, I am always reinvesting back in myself and in my team. At Kickstart Accounting Inc., I have a team of amazing women who love to serve our clients, and it's really important that we're all growing together. And so we're always spending about 10% of revenue back on professional development as well.
Okay, so you have continuing education that you write off.
Of course, we all should.
I want to go back to advertising because that's a big deal with new coaches. Our listeners are doctors, nurses, health coaches, mental health practitioners, anybody in the wellness industry, or anybody in like life coaching or coaching industry. So a lot of them are graduating as a coach or adding coaching to a medical practice, and they have zero starting out, but they have to advertise to get started, right?
So to clarify, because you asked me that question in the beginning, and I'm glad you asked, I'm glad you're looping back around this, because if you don't have any revenue yet, or you're in your first year of business, obviously you're going to be spending more in advertising and marketing than what you have coming in. Right. So that first year or two, maybe even 3, I know it's a long time, but it takes time to build a business. You might be investing more in your business than the sales that you have coming in. So I appreciate you looping, but that back around, you're going to have higher costs than what you have coming in.
Okay. Great. Okay. So when we're saying percentages, we're talking about an ongoing profitable business. But when you're first starting out, you're making more of an investment in it to get a return back, to get to that ongoing profitable business.
Correct. Yeah. So we want to invest. That first year is going to be investing in the areas of the future. I had a client, Jenna, who was actually a coach, and her first year that she came to us, she really considered herself more of a like freelancer. And she came to me and said, "Hey, how do I run this business at a loss? Like, I know I'm losing money hand over fist. Like, what do I do?" And when we did her catch up of the process where we pull all of her transactions into QuickBooks, we realized that she actually wasn't operating at a loss. She was commingling business and personal expenses. So once we untangled that mess and we got her to spend personal funding out of her personal checking account and business expenses out of the business account, we found out that she was actually running a small profit in her business. And as she grew her business, like as she understood that she was capable of having a profitable business, she changed the way that she spent in her business. Year 1, she invested money from her 401k and from her personal savings into the business. And she invested in conferences, in marketing, in masterminds. I mean, that woman had boots on the ground at all times that year so that she can put in the work to have that return. Year 2, she said, all right, I need to dial this back. I need to only spend money on the things that were working. So year 1 was a year of trial and learning lessons. Year 2, I'm going to dial it in. I'm going to do more of what's working, less of what's not working. Then she needed to put down some roots in her community. So she wanted to buy a home. So we changed her spending again. We said, we need to have a really profitable business so we can get you paid more. So we dialed back the spending, took out some more owner's draws, gave her a salary. And over time, she was able to purchase her home. Right after she purchased her home, her mom got sick. And she needed to take a step back from her business. And she was able to do that because she reinvested the money of her business into her team and the team that was going to support her clients while she took that time off. So you see how like every year as a business owner, the way that we spend money is going to change. You have to know what your goals are first, then like set your intention for the year, and then figure out how you're going to keep score. So we always tell our clients, as your bookkeeping team, as your money team, we are going to help you keep score. And so every month, no matter what, we send all of our clients their financial statements and a snapshot. The snapshot's this easy to read document that gives you a high level overview of your numbers. My client I was just talking about, Jenna had that overview, that insight from day 1 of her business. And she had a money team to help her transition the way that she spent money and the way she paid herself and the way she invested. And it helped hold her accountable year over year. So I love that story because I think it's a reminder, life changes.
I think that's a great story. You know, I keep telling people get a business plan. And that's the perfect example of why you need a business plan and then why you need to reevaluate it every year too.
So I love the idea of a business plan. We call them budgets with our clients. So business plan is all encompassing, but you have to set the details, right? So if you just set the high level plan, yes, I believe the energy we put in the air matters, but we also have to put the details in, the milestones of how we're going to get there. Mm-hmm. So every single year, I suggest for every single business owner to set a budget. And the budget is a process of mapping out the next 12 months. What income am I going to have coming in the door? What expenses am I going to spend to help me hit those income goals? Because if we just put the energy in the air, that's not enough. We need the milestones. We need the details. So set a budget and talk to your money team to help you stay accountable to that budget.
Struggling to create content? The Health Coach Group offers top-tier done-for-you wellness courses. Save time and focus on what you do best, coaching. Explore our courses at thehealthcoachgroup.com.
What are some common signs that a business is either over or underspending where it can help or hurt growth?
The best place that we can look as business owners is at our financial statements. You know, I call it the report card effect. So many of us, I think especially as entrepreneurs, we received a report card growing up. And if you were anything like me, you got grounded once a quarter for talking too much and not paying attention. And now we come into our business and we get these financial statements. And it's really easy to think, this is telling me I failed. I'm not good enough. I knew I wasn't good enough. I'm never going to be anything in this business. And that's not true. If we can look at our financial statements like a story, what's working in our business, what's not working in our business. So the best thing you can do as a business owner, and I don't care if you're just starting out and you have one client, the minute you filed your LLC paperwork, you are now a business owner. You are a business owner from day 1. You need to know your profit and your loss, your income statement. And when you look at your income statement, the number at the very, very bottom of the report, it's your profit or your loss. That is the most important number, because if you are spending more than you're making, you have a loss. And I don't want you to shame yourself. I just want you to take it as an opportunity to ask yourself, what happened? Maybe you're in year one where you're investing more than what's coming in. You acknowledge that, you tune in, what's working, what's not working, what am I going to do more of, what am I going to cut back on, and you do it again. But the best part about looking at your financial statements every single month is that you have an opportunity to correct fast. Like, you're not waiting 8 to 10 months. We had a client who she had added on a second revenue stream into her business, and she was so excited. She ramped up with some contractors to help support her clients. Now, on paper, if you only looked at her point of sale system, if you only looked at her gross sales, hockey stick revenue, Kathy. I mean, like hockey stick, incredible growth. Clients coming in hand over fist, tons of cash. What happened over time is that she had to pay more in the contractors than what they originally had quoted her. And she was paying them more. And over time, every month when we looked at her financial statements, expenses were going up, her debt was going up, and she was putting her family in jeopardy. And she started this in July. In August, she sent me an email and she said, Danielle, I got to cut it. I gotta terminate the new revenue stream. I can't continue to do this and put my family in jeopardy. Could you imagine if Katie had waited until December or January when she did her bookkeeping for tax time?
Mm-hmm.
I mean, she could have put her family in some serious harm because they needed her income. So anyway, her and I still talk about this all the time of like, thank God she was looking at her numbers and she was able to terminate that and make a move before real damage was caused.
So the moral of that story is you need to check every month, not every year.
Right. We can't wait to do our bookkeeping at tax time. We have to look every single month.
How can business owners determine the right amount to invest in things like advertising and marketing to see a significant return on investment?
Talk to your money team and put together a budget. So back to where we were talking about the business plan, let's look at the budget and see how, like, what are your goals for this year? Like, where do you want to see yourself go? What is your intention for the year? Now let's map out the spending, and that's going to give you the best tool for accountability and planning.
And if you cut back on your advertising, then you're going to end up cutting back on your income too, aren't you?
Right, exactly.
Can you share a success story of a business that significantly improved its profitability by following your spending recommendations?
Oh gosh, if I have so many, I can't even count. So we have a Teams channel for client wins. So I'll share a most recent client win. We had this client who came to us 2 years ago, and her goal was to replace her income. She had left a 6-figure position and she wanted to pay herself $120,000 per year. And at the time, it felt like, gosh, a goal that was so far off. When we did that first budget session with her, it felt like a mountain on top of her shoulders. And we just said, okay, let's take this one step at a time. And let's put together a spending plan of how we're going to get there. Where do we need to invest? And how do we need to monitor the initiatives to get there? Now, to be clear, we're a bookkeeping firm, not a business coaching or consulting. So we're not in the business of telling clients what sales channels are going to work for them, but we are in the business of reporting back, here's what that sales channel is doing today. Here's its performance, and what do we want to continue to do moving forward? So we charted the budget for her, and she's in her third budget. And this is the first time, her first paycheck this month, that she is on schedule to pay herself the $120,000 per year. And
how long did that take again?
3 years.
3 years.
3 years.
Good for her.
Yeah.
And good for you too. That's
Yeah.
great.
I mean, over time, she got to pay herself more and more. So it's not like she wasn't making anything, but we slowly over time watched it increase. And I really think it's from charting the plan and then monitoring the plan. So we set the budget, and then every month we send her the budget to actuals so that she can do the hard. I mean, she did the hard work, not us. She did the hard work of asking herself, what's working, what's not working. And she tuned into her numbers. It's so easy to say, I'm not a numbers person, or, I'm just not good at this stuff. I was never good at math. It's confusing. It's easy to shy away. It's hard to lead in. She did the hard work.
Now, does she want to raise?
Yes.
What advice would you give to a new business owners who are hesitant to spend money due to financial instability?
I would say don't wait. The business owners who we have seen the biggest growth are the ones who took a chance on themselves. They took a risk in investing in themselves and getting the support that they need in order to grow. And so whatever that support might be, don't wait to ask for help in your business. We're not meant to go at it alone. Like, us as humans have communities, and it's okay to say, I'm not a bookkeeper. I don't know how to do bookkeeping, and to hire a money team. It's okay to say, I don't know the tax code. I need to hire a tax team. I don't know how to run paid ads. I need to hire a consultant who can help me run paid ads. You as a business owner are not supposed to know how to do everything. I got my start in corporate and working as a CFO. Let me promise you, my CEO was not doing those things. He did not do them, and we're not meant to do everything in our business.
Yeah, there's a big difference between running a business and being an employee. And a lot of people that start in our business don't realize that. They don't realize everything that's involved in running your own business. So I think it's important to understand how important that the financials are and the bookkeeping end of everything is, so that you can make sure that the business is going in the direction that it's headed, and that it does take time. What I loved about your success story was that it took her 3 years to get to where she wanted to be, and where somebody who's been an employee all their lives and started a business, they think that they're going to get to that 3-year mark in 3 months. And that's not very realistic, is it?
It's not.
Yeah.
It just takes, it's funny especially as like a health coach, right? Like, for your clients that they can't get results in 30 days.
Right.
It'd be like promising your clients results in 30 days. They don't get results in 30 days. You're not going to get business results in 30 days. It's the test of time.
You do it right, and it takes a while. Yeah. Very good. Well, thank you so much for being here with me today. We have a couple of URLs that we'll put underneath your show notes, and everybody can get access to the information that you have on your website.
Thank you so much for having me. I love being a resource for business owners. If anybody needs help, you can go to kickstartaccountinginc.com, book a call. Our team is here to be a resource for you. You do not have to go at it alone.
Great. Thank you so much.
Thank you.
Thanks for listening to the show. If you liked what you heard, please give us a 5-star rating or review on iTunes.